Hey everyone, and welcome to the Savvy Startup. My name is Imran Mohammed, and I have my partner here, Tim Krulia, and together we're going to take you to the next level of setting up your business for success. In this video, we're going to cover the basics of the bookkeeping system, how it works, and why you need it. So, what is a bookkeeping system, and why do you need it? A bookkeeping system is a software that helps you keep all your business income and expenses organized. Consider it a filing system for your finances that, if kept up to date, will tally all of your assets, liabilities, equity in the business, investments, income, and expenses. So let's talk a little bit about bookkeeping systems. There are numerous options for bookkeeping, and you will find that there is an option for every budget and complexity. For the simplest of finances, a spreadsheet can suffice, but this requires some basic knowledge of accounting. Because of how readily and easily available these software solutions are, we do recommend using a software to take the guesswork out of the setup and organizing your finances. The more expensive softwares offer automation and sophistication to help account for complex transactions and agreements. You will need an accountant to help with the bookkeeping for complex financials, regardless of the system you can choose. For this overview, we will use QuickBooks as an example of a bookkeeping system, as it is widely used, easily available, and very affordable.
So, Imran, just a quick question for our folks here. Would you say that there are basic steps that you would advise for different sizes of companies and their different kind of complexities for the different kind of softwares that you believe would be best suited for certain situations?
Yeah, that's a good point. So in general, you would basically look for easily available solutions that fit your budget. And most of the lower softwares or simpler softwares have very transparent pricing. The bigger softwares, the pricing is not. It's either user based and feature based, right?
You know what, Imran, that brings up a good point. There are a lot of different types of uh, bookkeeping software available, and they really do apply to different business types and different business sizes. Could you give a little bit of information on what might be a good fit for smaller businesses that are just getting started versus the more established businesses?
Yeah, of course. QuickBooks obviously is the most common one that you'll find over and over again. Quicken does a product as well. You'll find Zero out there as well. There's some bigger systems, and those are not as easy to price because they're feature based or user based. QuickBooks and Quicken and even Zero, they'll generally have very transparent pricing. So depending on what you want to do, if you're just starting up your business, simpler system, start small. You can always migrate into a bigger system later. So on that note, let's talk about the scope of what we're going to cover here, because we can't obviously cover every system or software out there. So let's talk about the content and as well the system we're going to use as an example for your solution. So we'll cover the elements of a bookkeeping system, for example, the chart of accounts. It's going to be a very key component of how you're going to use the system and what you're going to track in your system. All right, so for purposes of this video, we're going to assume you're recording items on a cash basis versus an accrual basis. But we don't want to leave you completely dry. So, Tim, tell us a little bit about the difference between those two.
Sure. Cash basis and accrual basis. So for more complex businesses, generally larger, like so your medium and larger sized companies are going to want to use the accrual basis. That's typical. But if you're a smaller business, you're probably not going to be asked for audited financials and things of that nature. So going with the cash basis is a much more simple way to basically get the job done, so you can know your numbers and have your books ready to go, so when it's time to file your taxes, you're all set. So just think about it this way: cash basis is just money that comes in the door when you actually receive it, okay, and the money is in your account. That's when it gets recognized. When you send an expense out, that's when the expense is recognized. It's just that simple. And I think For small businesses and oftentimes medium-sized businesses too, cash basis is really just the way to go because of the simplicity.
Yeah, thanks, Tim. And it's important to note once you start doing your taxes at the year end, if there are any expenses or revenues that need to be recognized a little bit differently for accrual basis, they'll make the adjustments for you and they'll work together with your accountant of choice. Great. All right. Well, we will not cover setting up user accounts in this video. This overview will assume you will get yourself set up to access the software. Because we're not choosing the software for you, just giving you an example of it, a lot of it, how we're going to set it up, is going to work very similar. In this case, since QuickBooks requires an Intuit account and then a QuickBooks user account, you're going to have to set those up. And then we'll take it from there and show you how to set those up within the system. All right, well, getting started. How do we get started with setting up the chart of accounts and the rest of the system? So within the bookkeeping system, you've basically got an option to set up chart of accounts that are going to record your transactions on the revenue side, on the expense side, and the asset side on the liability side, right? Those are your basic groups of accounts. You can break those down into a lot more detail. Now, bookkeeping systems will generally set some of those basic accounts up for you. So let's talk about those major groups. And within those, you can always break those down further. So retained earnings. This will hold any of the profits that you leave in the company at the end of each year. This account will be shown in the equity section of your balance sheet. Assets. As a start, this will show your cash in the bank from the initial cash infusion into the business, which is the equity, and earnings from sales that are deposited into your accounts, less expenses from purchases. This is part of your balance sheet. Liabilities. If there's a loan, a bill from a product or service, or a credit card bill that is due in the future, due past the current month, a liability account will be used to show the balance of the loan or credit card. This is also part of your balance sheet. Now let's talk about a couple of major accounts on the income statement. Revenue and sales. Your sales will be recorded in this account that appears on the income statement. You can create additional accounts to show the different types of products, for example. Cost of sales or expenses, those will be recorded in the account on the income statement as well. And you can create different types of expenses. For example, travel, software, internet, subcontractors, all of those can be recorded as expenses on the income statement.
Yeah, and this is like when you're setting up your chart of accounts, it's great. It's an opportunity to kind of get the lay of the land of what your financials are going to be telling you, what you're going to be looking at on a regular basis from your balance sheet as well as your income statement. Okay, so this is kind of like answering the question, how are we doing, right? Like this is, you're laying out the different like you said, assets, liabilities, revenue, and expenses. And guys, you don't have to nail it right at the get-go. Okay, as your business grows and you get new line items, different types of revenue, you can add more line items to your chart of accounts. You take out a new loan, or you add a new bank account. You can add liabilities to your balance sheet and your and assets to your balance sheet. You're going to have all kinds of different sort of variable expenses. In other words, cost of goods sold. You're going to have all kinds of different expenses that are going to come up, and you're going to want to create new line items for them. So your chart of accounts it's like a living thing that continues to grow, and you can also inactivate line items that you no longer use. So don't stress about this. Just get in there, get the basics, and then you're good to go, and you can always make changes as you move along.
That's a good point. Let's not try to be perfect in the beginning. It'll evolve over time. All right, let's jump into the QuickBooks setup process. After you've set up your Intuit and QuickBooks login, you can choose the basic package for subscription. You will need to already have set up your company from a tax and legal perspective, which is covered in a separate video in our series. In QuickBooks, you will then enter the information for your company, such as the legal name, tax filing status, and tax ID and legal address. This screenshot kind of shows you an example which will be similar across softwares. So you just have to go in and fill in the information based on what they ask. Some fields will be mandatory, others will not. Don't stress about it. Enter the information when you have it and move on. Okay, once the company is set up, you can navigate to the setting up of your chart of accounts, and you'll find these in the transactions menu. As you can see in this example, once you click on the transactions menu, you have options at the top, and you can choose chart of accounts to show exactly the screen that you need to set up each account. So I mentioned this earlier, QuickBooks will set up some basic accounts, and I believe that other software will also do that for you. But since it's basic, you'll have to add additional accounts to help you track some of the basics of what's coming in and out of your accounting system. So let's customize these, and I can run through these very briefly just to show you what happens. As you can see, there's names of the accounts, the type of account it is, and that'll dictate whether it's on the balance sheet or the income statement. And of course, what kind of detail is going to be in there. So that just helps you define what you're going to be using in the system. Also under the transactions menu, you're going to see an option for bank transactions. This is kind of important because it'll allow you to actually connect to your account automatically, or you can even import all of your transactions from your bank using a manual setup process. You have the choice either way, and most systems should be able to connect to most bank accounts out there. We haven't come across any examples where that has been a limitation.
Yeah. So one of the things that you should consider doing when you're getting these things set up, and thanks, Imran, for going through this component of it, is, man, you can save yourself a lot of time by just tweaking and getting these few little pieces of automation set up, right? So if you can have it automated. So bam, 100 transactions from your bank account, boom, right into your QuickBooks. And then once you have them in your QuickBooks, you can also add other types of features that bring a little bit of automation. You can't replace the person, right? You can't replace the expertise and the knowledge behind what you're doing, but you can put rules in place where if QuickBooks can see that a specific vendor received a payment from you, that you can have them code it to a specific line item in your chart of accounts, and then boom, all you have to do is just approve it instead of going in there, thinking, okay, what was this? How did I code this the last time? What's the name of that chart of accounts line item? And they have to maybe go back in time and try and find it, and then you finally do see it, you code it in there, and now you got it finally entered. Take the time, learn the principles of automation that the software, whatever you're choosing, QuickBooks is great. Whatever you're using, whatever automation tools that they already have in place, learn them, because the amount of time that it's going to take you to learn it versus the gains that you're going to get by using the automation over and over and over again for months and years, it far outweighs it. So please just give yourself that advantage.
Yeah, great. Thanks, Tim. So to connect directly to your account, here's an example of a screen that you can see. They give you examples of what you can connect to. So all the major banks are represented. And you basically go through the prompts, connect to that bank. You'll obviously need your username and password to connect it. It is a secure method. It's done by multiple companies, and you can import. The transactions all flow in directly from your bank and credit card straight into the software before you can actually start assigning and coding, which we'll also touch upon. Alternatively, right, if you're not connecting directly, you can do a manual upload as well. So it'll give you the option how to manually upload your transactions. And essentially what that is it asks you to extract a CSV or a text type document and then upload it in a separate screen. When we're pulling in transactions automatically, the file for QuickBooks is called a QBO format, and it already does all of the, setup and formatting for QuickBooks, and that's why it creates a very convenient way of doing it. You simply sign into your bank, download the export in the QBO format. And when you upload it, everything's already done for you. Here's a screenshot from a bank. A lot of them will look very similar, where you can actually choose the account, choose the date range you want to import, as well as the format. And here's the example of QuickBooks. You can see that there's a Quicken option from this bank, as well as a CSV or a text file option. So in the scenario we're using, we're doing a QBO extract, which is this QuickBooks right here. And the date range is very important as well. This example right here on the screen is a CSV or a text file. You can see that there's hardly any formatting, but you do see a date, you do see amounts, and you see a description. This is going to clue in what you're going to code into the system. And I can explain that image a bit more. When you import that transaction file, the CSV file, your system should prompt you what exactly you're importing. And in this case, you can see you can choose a certain bank account, which you can also rename later, or add one in the beginning in the setup side, as we were talking about in the chart of accounts earlier. So you can just run through the steps, and it'll go through some prompts of what to do with each of the pieces of information on that system. For example, is the first row in your file a header? That'll help basically the system to ignore that. How many columns show amounts? Well, in our example that we saw earlier, just one column showed an amount. And then what the format of the date is, that helps it read the format. And then, of course, you can go through each prompt and assign everything. So here's an expected result of using a manual import from a CSV. You can see the date and the formats specified. You can see the description as well as the amount. And that's technically all you need to start the coding process. Another important thing to note is different transactions come in as different signs. Some are positive for expense, some are negative for expense. You're going to have to assign those properly so that they don't show the opposite in yours, because addition and subtraction on an income statement works based on the type of account it is. So once you proceed, you're going to see essentially a result of what you've imported. Just make sure that the details look correct and you can see what's been spent. Make sure that the outgoing dollars are showing in the spent column and the incoming dollars are in the received column. If they're not and they're reversed, you may have to go to the previous step and change the signs as it asked. This should be something in other systems as well, where you have to be careful about how you're importing and what the value is, whether it's a negative or a positive. So I encourage you to do the research on your own program by yourself to make sure that you're doing the right steps to set this up correctly. Now, you can add additional information about your transactions to ensure detailed bookkeeping and enable useful reporting. In this case, which individual or company the income or expense was from, and which account the record should be coded to. As you can see, you've got a blank field in the payees specifically. The categories are filled already, and the descriptions filled already. So you can go to the transactions and actually add in the payees. And even though the payees need to exist in the system, you can add them in the system while doing this process. If the payees are already in the system, you can actually pull them down and select them from a dropdown.
One of the other things too, when I was talking earlier about automation components, if you've set up some automation for rules, is what they're called. Basically, a rule would know, okay, well, if you see a charge from a vendor with this name, then it's going to show up and automatically code it to, like, let's just say subcontractor expense. Well, it's your responsibility as the bookkeeper, if you're going to do the books yourself, that you are double checking what is coming in through the automation and making sure that what QuickBooks codes it to based on what its set of assumptions were is actually correct.
Mm-hmm.
Okay. Because there could be a real problem. Let's just say there was a charge to ABC company. Okay. And QuickBooks wants to, they think, oh, well, I've seen that to travel before. Well, what if that was actually a member draw and you were taking money out of the business for your own personal use? Okay, that's not a real business expense. Okay, that has a net income effect to the business. It has a tax effect to the business. So you want to make sure that you're proofreading everything as you're going through and before you're checking off. Yes, that's good. That's good. That's good. Oh, whoa, that one that one needs to be edited. So as the bookkeeper, it's your responsibility to go in there, make that edit, change it to member draw in that sense, then select okay, and then keep moving on to the next transaction.
Yeah, absolutely. So let's show you a little bit of an example of how you change some of this stuff, right? So you basically select the payee field for the first transaction, determine if this is a sales or revenue transaction. You may have to go back to your bank or credit card statement or log in and verify what that is. In this case, the $10 amount that could be a software expense, right? Confirm that that's the case. For our example, we'll assume this is a software subscription expense from QuickBooks. In that case, you need to code the payee as QuickBooks. And software expense is just fine because that's an account that you can either create or it already exists and you've already selected it. In an example here, let's show you what creating that QuickBooks vendor is like. When you click on that name field, you're going to see essentially a place where you can add all the information necessary. The most basic information is just the name of the vendor. All the other information should be essentially optional unless it indicates it's mandatory, and then you can do your research and add that in there. I'd like to note that when adding a new vendor, you should figure out if you need their W-9 to also collect their tax ID for 1099 purposes. One of the things that you'll have to do and you'll need for the year-end tax purposes. This topic obviously doesn't cover tax-specific items, so we're not going to cover that here. Now, save the vendor, and you can do that for each transaction. And once you're finished coding all the transactions, you can actually run a report to see the result of what you've done. So on our screen here, you can actually see that we've gone to the reports menu. And within the reports, look for the balance sheet or profit and loss reports, which will be standard reports in any bookkeeping system. And once you run the report for the period you imported, you should see the results of your import and all the related information on the balance sheet as well.
Yeah, it's just I think that this for folks that are just getting started, they probably don't really realize that like the it says profit and loss there. We've already referred to that as an income statement. People call it a P&L as well.
Mm-hmm.
But listen, guys, it's all the same report.
Right.
Okay. And I mean that to me, I love that report. I can swim in that report all day long, learn a ton of things about a business. So P&L, profit and loss, income statement, it's to me, it's kind of the king. And I know that the balance sheet is maybe the queen. I don't know. Maybe it's just a bunch of BS. But no, like for real, P&L, income statement, P&L, profit and loss, all the same thing.
Tim, that's a great point. Thank you. So let's use that to go into the financials and actually talk about the P&L, profit and loss, income statement, and the balance sheet. Let me start with the balance sheet first. Once you click on the option, you can update the filters to show the period you want to run. That's important because what you've just imported, right, was for a particular date, start date and end date. And you want to make sure that when you're reviewing the results of what you just imported, you're also looking at the report for the same period. Otherwise, things just won't make sense. So run the report for the period, and you should see the results of your import. And here's an example on screen of what it looks like. As you can see on the balance sheet, you've got your assets. Very simple. Right now, we've only got one account the bank account, what came in for each month. You can see the periods at the top across the columns, and the bank account is right here. That makes up all of your assets. As you add more assets, they will show up here in your report. Liabilities, same thing, right? And then here's your equity and the money that you brought in. All of this should kind of make sense as to what the money coming in and out of your business is. And a balance sheet basically shows you the running balance of all of your assets, liabilities, and equity in the business. So now onto the P&L or income statement, or profit and loss, as we refer to it. You can see that all of the transactions that you brought in also are reflected here just in the period of what it is. This is not a running balance for each month. It's actually the revenue or expense for the period in the period. A little bit different than the balance sheet. Both the balance sheet and the income statement are covered in a separate training. But here's the result of actually having set up a bookkeeping system, imported the transactions, and showing the results of what you've imported. And both of those reports and the information that you brought into the system should help you evaluate your business and keep an eye on what's come in and gone out of your financials over time. Well, that's Bookkeeping 101 from the Savvy Startup. And I'm confident that this overview will get you off to a great start. Thanks for watching.